The Trade is brought to you by ACY Securities, Tim Cahill's official FX and CFD trading partner.
We have another busy week coming up, especially on the macroeconomic calendar. And to talk foreign exchange currencies today, Duncan Cooper from ACY Securities joins me. Duncan, great to see you. It's, as always, wonderful to start the week on The Trade with your company and your insights. Coming off a pretty significant week, mostly because of US economic data. We've got all this talk about soft landings again. We've got all this sort of speculation about what the Fed could do next. We're going to dig into the currency landscape as a result. But starting with the US dollar index, what are you seeing here?
So on the weekly chart here, we're finishing very negative last Friday. We obviously had the job figures coming out. In fact, Thursday we had the unemployment claims ticking a little bit higher. Non-farm employment change figures were maybe a little bit lower than expected, and we had quite a sell-off on the US dollar on Friday. And when we look at the weekly look of the dollar index, it is still rather mixed. We have a higher bottom maybe and a lower top forming, and finishing very negative on Friday. So maybe we are moving back down to the bottom of the range. It's a little bit mixed there looking on the weekly, and I think we have a daily perspective there too, which is just showing that we are starting to move down to a lower bottom. So maybe we are going to put in a lower top this week to move down to the bottom of that range. Of course, in the week, we have the CPI data on Wednesday. I think we're expecting a move year on year down from 4% to 3.1%. I don't know what your thoughts are. Do you think we're going to be moving down substantially on the year-to-year figure?
Well, I get the sense that, the US dollar has room to move higher here, and I just sort of note that potential higher low there on the chart. I have this bias that perhaps the Fed will hike into a recession, and that will be good for the US dollar ultimately from a yield point of view, but also a safe haven play. But I guess we'll have to follow the price signals, and as you've just sort of noted there, we could potentially in the short term be seeing some, perhaps downside towards that 110.82 level. But I mean, we can't talk about the US dollar and like we were just touching on there, without discussing yields right now, and effectively the 2-year yield here, a very, very good reflection of short-term interest rate expectations. So what are we seeing here? Because we're coming back to, new highs. In fact, arguably we tested new highs over the last week.
That's right. Last week we tested the current high for the year. And, the dollar index is looking a little bit negative, yet the yields are predominantly staying higher. So we've got a little bit of a divergent look there. So we obviously have the CPI data coming out this week, Wednesday, the PPI data on Thursday. We don't have the FOMC statement until 2 weeks away. So plenty of time for Fed, to shift their decision-making process from the data that comes out this week. So I'm just seeing a little bit of a divergent factor here. Yields are predominantly rising. Dollar is falling a little bit. So we'll have to wait and see what the week brings, but that's what I'm seeing at the moment. A little bit of, yields are rising. The US dollar is not rising at the moment. So there's a little bit of a mixed message there at the moment. We'll just have to wait and see what the data brings this week and see whether that clears things up.
Yeah, certainly. And it would be remarkable if we break above that level. It was around that time of the Silicon Valley Bank collapse that we did see the peak in the 2 years. So it might be telling and put some stress on financial markets if we do see that break above that resistance level. Go on, Duncan.
If we break above there, then of course, last week's very negative tone may become a very positive tone for the US dollar. So, traders should definitely watch the 2-year yield to see what happens over the coming week.
Absolutely, and some data coming out this week too that will be very influential. But let's get to, we started on the US dollar index. The biggest driver of the US dollar index overall is, of course, the EURUSD. And, you could say it's somewhat of the inverse of the dollar index in some ways. So, we're looking at a key level here that, if we break, maybe retesting those highs as well.
Exactly. We're rather range bound. I mean, on Wednesday, we finished very negative at the bottom of the range, and I was potentially anticipating maybe we're going to be moving down below 108.44, but of course the job figures have moved ourselves back up to the top of the range. So 109.70 is the key level for traders to watch early in the week. If we can keep the positive notes, then a big level to watch is 110.33. We've been failing there, certainly at the end of April into May, where we got rather consolidatory before having a substantial move down in May. So if we can break high, 110.33 is the key level to watch through the course of the week. Can we move above that level, maybe to test the 110.95 level? And can we actually trade at 111 for the year? So can we break above 109.70 this week? That is the question.
That is the question indeed. And well, let's get to another pair now. The sterling, and well, actually, it looks like we've arguably closed at a higher level there on the dailies, made a new closing high, and well, the momentum here does appear skewed to the upside with maybe 130 in view.
Yeah, that's what I'm anticipating. Last time we talked, I was saying I had a target of 130, and I put out to our clients last week that dipping down to 126.79, which is weekly support, which we held there last week, could have been a good opportunity to be a buy, and targeting 130. So if we can, as you've just said, we've had the highest close for the year now, testing the high of the year at 128.48. So if the market's kind this week, we may get a dip down to 127.59 day support, and I'm going to be watching down there if we can get a friendly dip for a move up to 130. I mean, we're only 150 pips away from 130, so we can certainly get there this week. So can the market just offer a friendly dip maybe before the CPI data comes out, down at 127.59? That'd be ideal for traders.
Yeah, okay, so that's where the dip could be bought this week. Of course, we'll be keeping an eye on all UK data. It's proving very, very stubborn inflation over there. But hey, this is an interesting one. The Loonie USD CAD. Two reasons. We did have Canada's jobless data on Friday night, was a little bit softer. But also we have, I believe, a Bank of Canada meeting coming up. So what are we looking at here when it comes to the pair? Because, I mean, it's a volatile pair naturally, but it seems that the USD CAD is in something of a downtrend.
Yeah, I mean, this is a day chart view, but on the weekly chart and the monthly chart, we're actually in downtrends now. So we've just been having a corrective move back. Key level to watch there is 132.62, which is monthly support. I had a negative day Friday, back down to that level. I haven't got a chart here, but of course oil is rising, which is good for the dollar CAD in terms of moving down. And we got their interest rate decision on Thursday, our time at midnight. So expecting 25 basis point rise to 4.75 to 5. So that means after a 2-month pause, we've had an interest rate decision rise last month and potentially expecting one this month. So that's all positive, potentially for the dollar Canadian to move down. So traders should be watching 132.62. At the moment, it's potential support because we're above it. But if we want a small break below it, that's the key level to watch through the week. Is it support or does it break for resistance?
Yes, and okay, there's the key level to watch there. 132.62 monthly support, as Duncan has just outlined. Okay, let's all finish it up by bringing it back home now. And the Aussie dollar been, well, I suppose a pretty interesting trade. Strong in June, perhaps a little weaker as the flurry around that, China stimulus trade diminished, and a pause from the RBA last week. Interesting what it did to the currency. So what do you see here when it comes to the pair? Take us through the key levels to watch.
Well, of course, we had a very strong move up. We actually broke above the 68.05 area up to 69 last month. And then we both broke, heavily pulled back. But from a weekly perspective, we put in a higher top. So I'm expecting maybe we're putting in a higher bottom now around about the 66.04 level. Now, with the dollar coming out this week, we could actually trade at all these levels this week. We could retest 66.04 to be support. Middle resistance there at 67.05. I'm anticipating maybe we'll break above that this week, and that could become support. And then by the end of the week, we could actually be trading up at the 68.05 level. So I'm a little bit hawkish on the Aussie at the moment. A couple of months ago, I was very negative, but then, of course, we've had a much more hawkish tone, I think, generally speaking. And I was watching the ABC News this morning, and there was an economist there saying that he's anticipating that we'll get an interest rate hike next month and maybe the month after as well. So, of course, we're on pause this month. So we'll just have to wait and see whether more interest rate hikes come. If we do, we could well be seeing, a further move up and now a test of the 69 level once more. How are we starting to see a long-term move up there? If we think about the Fed, they've got a target rate of 2%, I believe, for their inflation figures. If we get a significant drop this week, they're getting very much close to their target rate, aren't they? And we're not, so we could well be seeing a further rise on the Aussie there. So those are the levels to watch through the week. We could touch all three of those levels, I believe, this week. If we pull back, first of all, we could be retesting 66, then moving up to test 67, and we could, trade up to 68 by the end of the week. So those are the levels to watch for traders, most certainly.
Yeah, and well, we really are waiting for perhaps a trend in the short term to form sideways for a little while now. Some major push and pull factors, as you've just outlined there, Duncan. But we've got to wrap it up there, but really appreciate you kicking us off again for the trade this week. Have a wonderful week. We will do it again soon. Duncan Cooper from ACY Securities.
Thanks, Carl. My pleasure.